Good morning. The market's going to open up at 6:12 a.m. Pacific Standard Time. We open up at 6:30 at today's date, last day of the quarter, 9/30/2011. MMTs, what I did want to explain to you about this Nasdaq 100, that's like where the Apples and a lot of your high beta stocks are now as far as the overall Nasdaq. Okay, so we can see clearly right here that the public is going to look at the various moving averages, such as that 10-day simple moving average right down here, and it's at 2255.57. Let's get into the actual 50-day simple moving average, which is the white line. That's going to come in and clock in somewhere right around at its current level. Let's take a look at it, 2227.2304. Okay, and the 20-day simple moving average, as far as the public model goes, is going to be, yesterday was 2228.73 on the 20-day. That upper end of that 100-day simple moving average, that is 2270.95. The current bottom is that, yes, we have this nice rally here to the reversal, and you can see that we've started another 3-day left side reversal going into the last day of the quarter, and that the 40-day moving average is going to be 2190.31. That's this line here. And you can clearly see that that wick up off of that bottom did regain it. However, with the morning gap down in the Nasdaq futures of 25.5 handles on the last day of a miserable quarter for people that went into a slower growth contraction that remained long are now paying consequences for those particular type of things that happen in markets. So if we sell through this major bottom here today, then that means that that short side of the market's going to be working well. It will also mean it's an options expiration, and it can be extremely, extremely volatile. That's why we have a scenario set up here on the Nasdaq 100 called index options, and boy, do they pay. We're going to be watching the 2155 put below the market, but also the 2155 weighted call 1022 expirations. And we're just going to take a look in here of how the Nasdaq 100 put to call ratio is getting weighted between these two strike prices. There's a reason for that. Here is a 2200 put and call ratio that we're actually involved with. The Nasdaq 100 sells below that 40-day simple moving average. Another thing that I want to show you here is what's below the market if we break from this view. And you are going to clearly see MMTs on an options expiration period. This is where this last gap up to the high where that short goes, okay? This whole area comes back into play when we break this trend line, MMTs. And if the negative ratios are high, and if we go into a daily sell signal, the public will even get more frantic. See what happens when they go into a daily sell signal, they start another leg down like right here. Can we see that part of it, everyone? See how that went down, and see how this daily sell signal went down? See that? And then you put bottoms in. Okay, yes, we're consolidating much higher, and that's all good and well. Through the buy and sell transaction, though, is if we start to break these key levels, you will see the selling increase. Once again, the left elbow gap down this is the Nasdaq 100. Well, right now I put it on the NYSE, but you can see the gap down in the NYSE right here. Boy, it's long. It's all day. Boy, oh boy, look at how long it is. And just the other day, every one of them were 1.00 higher positive ratio. But you can see where the downside volatility, Signup is leading the way. But back to the Nasdaq 100, it's very, very, very important to understand those breaking levels and how that public is going to sell more. At some point, they're going to hit the bottom no matter what when it dries up. But right here is that trend line. It's this one here. And the thing about it is, if I come up this way, right here for you MMTs, this is how the public would look at it now. You are a market maker between the buyer and seller, but what you want to know is you're already right here where that diagonal trend line is, and that horizontal one here is you're already that going down and testing that. And the thing about it is, to confirm it, it's going to have to break the trend line and have to become resistance, and then come down and see where other market levels are made. And this is the last day of the quarter of 2011. Today's date is 9:30 now. And just remember, from the top market over here where we were calling short, because SMF did, go back 3 months ago in SMF and look at all our index videos. Find your truth there, because that was live, and just like we're doing right now. And basically, let's just take a look. Yeah, I would say that that comes perfectly right to that trend line at 2100 if we break it. Good morning. 5:51 a.m. Pacific Standard Time, 9/30/2011, last day of the quarter. A miserable one for fund managers, because the thing about it is, everybody had what they thought they had the perfect recipe a year ago when we had the QE2 move, but it would end up failing. People riding on them coattails ended up getting gap downs again on price line right here. 6.53, Baidu, another Google, 451, Win. What a nice short. Win was great in 2008. We did it up there at 160 then, and history has a way of repeating itself, and it's full-blown working. Yes, it is. Another little Chinese ADR, SINA, down another 352. How about that? Apple 2.69. Look at these great, great, great left elbow gap downs. We remember that over the last 10 trading days, within that 10 trading day structure, there was a lot of right elbow. I'm going to short that gap and that half bar, and how correct we were on that. Now, when we get to this particular day, are the fund managers wanting to buy this hero day of making themselves feel better about a miserable quarter that most people are suffering from? And why is that? Growth, contraction. And we said it 1 year ago as to what this time period would be. And then moving forward into 2012, and what that whole international community, how balanced it will be, or how unbalanced it will be, versus U.S. structure. Okay? And here it is. So, guess what? It was a very miserable quarter, and part of our analysis was that maybe it's a good time to go ahead and cut the losers today. How would that be confirmed? Every time you would make lower lows, you would bounce, but when you bounce, you'd only bounce up a teeny and then make another lower low. Until you may want to start looking at 1.5 to 2 deltas down on some of these gap downs in your brain. Remember that yesterday was a huge delta expansion in the SMF market maker platform across all asset classes and equities that we cover anyway, is that we did see an expansion. And that expansion is a warning sign of higher delta ranges making a market on the lower end and selling on that top end now. And keep selling that top end because they're going to be rolling back over. Okay? The selling could be brutal because maybe they want to clear the quarter out and get rid of it. And this is live right now before this opening bell in 35 minutes. But let us not forget that the previous forecast by SMF as to where that these things were going to go, and I guess from Brian Planas, we are going to do a radio show this Friday and this weekend with people about what they feel, the public model, that is. Anyway, left elbow gap down, you're going to come ripping up off of there. Then you're going to see if they're only going 3 teenies off of that bottom and starting to roll over, you'd be selling, but then selling and triggering short. Remember, it's the end of the quarter for the underperformers in the U.S. equity side. And it's been evident that there have been funds such as Goldman Sachs that have closed down. And a lot of these funds, like Goldman Sachs and UBS, and there's a lot of other ones that people just don't ever really hear about. But nonetheless, if you're not on the right side of that market, and you always have to have risk for days like down days like today. And the thing about it is, because of the risk management, you're very happy to see these big gap downs. Because when you cash in at the bottom now, you get to take that bull side up. But just remember, if it's only going up 3 teenies and starting to fail half bars immediately within a 15-minute time cycle between the buyer and the seller, net weighted, they could dump. And they'll sell out to a certain level. And then there'll be some short covering. But it can be very volatile in price today based on that public sentiment. And with the gap down, of course, they're not liking it because they're not short these names. And the bear is in control. The bull certainly is not. And equity prices are at levels going into a major earnings season. And this is the last day of the month in September. And red October, it looks like it wants to start out that way. We'll see how it finishes up. We'll see how the left elbow, if it's 5 teeny breakouts and then pulling back only 2 teenies and then setting up to break out again, that means that the buyers would be in. And you would be getting more of the long side. You'd be up around 90 in the IR consistently, and it would just be at the high levels. You're not seeing that. You have seen it, MNTs, because we go through it daily, live, like we are right now. But you're not seeing that. That tape is right here, that short side. And it's a weekly options expiration. And the market opens up in 32 minutes. And it's going to be all about either I'm expanding off of that left elbow gap down once I hit that price and once I start to make that turn to the right side of that market and that half action breakout bar. I'm north and I'm not looking back. That could happen. It is the last day of the quarter, but remember that the general community of people are miserable because the forecast, we had much lower growth, but then Bernanke came out and said, oh, well, we have to reconcile it. We're wrong. Mr. Geithner was kind enough to come out and reconcile that he was wrong. And so then now people can kind of know where they're at in the world. The public model, as, you know, what is really going on in our capital system. What's important to the small business communities out there. I love buying small caps, always have. Making a market between a small cap company as a small business and they're being innovative and entrepreneurial wise. Hey, that's what investing and this country is supposed to be about. But let's see what happens with that TQQQ gap down. That Amazon is 2.84. That Apple's 3.07. And the leaders up here is Priceline. go find out where, you know, let's say well, start with, you know, one delta, a delta and a quarter to a half. Baidu, they're unwinding them all. And this is what we said when we did the history of the Dow and the history of these markets. We had did this a couple of years ago so that people could go back and review and then see where the world is. Year to date right now at 600 a.m. We're going to get through our options expiration pricing. The if there's a sell-through program, the models would be generating sells below moving averages, but at some point intraday, we will get a good side upside volatility. I will put a high alert out though. If that bottom volatility up is only 3 teenies and it starts to roll over, then it's weak and the broader market is weak between the net weighted buyer and seller